Hello guys, this is Oziden. Welcome back. If you find this video on YouTube, do it to subscribe, and if you find it on X, formerly known as Twitter or TikTok, do it to give us a follow, and don't forget to share. Alright, so the last time we discussed about Malaysian MSNR part 2, so today I want to show you guys something new in Malaysian MSNR part 3. As you can see on my chart, you see that we don't only have V-shape and A-shape key levels here, we also have other complex structures here, because most of you are running away from these complex structures, because when you enter your chart and you can't find A-shape or V-shape, you just run and you be like, there's no structure for today, there's no trade for today. Whereas you saw these structures, but you're running away from them because you don't understand them fully well. So today I'm going to break them down like ABC. They are very easy. Alright, so the first thing you are seeing here is what we call the A-shaped CRT key level. Now, most of you that don't know about CRT, let me show you guys. It's very simple. Very simple. So let's assume you have a candle. This is a candle here. Then you have another candle here like this. Now, focus on the logic and forget about the candle colors, alright? Whether uptrend or downtrend, it doesn't matter now. Just understand how CRT formation works. Alright, now CRT formation simply means, or CRT means candle range theory. Just telling you about how candle forms and how it takes out the external high, the external range liquidity, and the other liquidity, which is the opposite liquidity below. For example, we have a candle here and we have another one here. Now, whenever you see the market takes out this candle's high, it simply means the next drawn liquidity will be the candle's low. Alright, will be the candle's low, which is this one here. So this place will not be drawn liquidity. Now, whenever you see something like this, candle forms and that candle comes up, plays the high, then target the low. This is what we call CRT. Understand? Candle formation, the range from here to here, the open, the low, the close, the high, everything here, how they form, how market sweeps the high, target the low, and everything is all termed as what? Candle range theory, which is CRT. So as simple as that. So whenever I mention it, just know that I'm referring to something like this. So that's it, guys. So how to know that you are trading from the right key level? Number one, let's start with that. Number one, let me take this off. How do you know that you're trading from the right key level? Because most of you just enter your charts and start marking structures anyhow, but you don't even know if that structure is correct or not. Sometimes you can mark a level and the level will fail, and it's normal. But if it's not getting rampant, you know that okay, there's something wrong that you are doing. Alright. Now, to know a good key level to trade off from, number one, that level must have fair value gap. FVG. It must be what? Unmitigated. Unmitigated. It must be in line with the structure. In line with structure. Alright. It must be in line with structure. So you can follow these three rules, then you'll be fine. So let's assume that we have a weekly key level. Let's mark it here. Let's say this level we have here now is a weekly key level. Alright, a market taps into that weekly key level. Let me label it for clarity. Weekly, let me just use WK. Weekly key level. So market taps into that weekly key level. Now what do? Observe what kind of formation market giving there. Is it giving a CRT formation? Is it giving just an A-shaped key level like this, or a V-shape, something like this, or is giving a CRT key level? But if you can see here, as you can see here rather, you see that market is giving an A-shaped CRT key level. Why? Because market has swept this high, and the next opposing liquidity is not going to be this low. As simple as that. Alright, so this is already number one confluence. Also, look, is there a fair value gap around it? So let's assume that there's a fair value gap around it here now. Let's see there's a fair value gap here. Let me reduce the color texture. Okay, let's say that is a fair value gap around it. Now this will make this setup a high probability setup. Now we are trying to form a bias. So remember, we have not taken our trade yet. We are not trying to use our models to take our entries here. So we're trying to build a bias. So I'm showing you guys how to do it step by step. So let's say it has a fair value gap and there's also a CRT formation there. This will make your setup a high probability, and this kind of setup hardly fails, though they will still fail, alright, but they will hardly fail. At least 6, 5, 7 out of 10 will play out beautifully well, alright. So that is how it works. So after market has tapped into that key level, we already know that the next supposed liquidity is this place, so this will be your what? Target. Very, very important. So those of you that don't like holding trade for long, this one will give you more confidence to actually hold your trade, since you know that as market has taken out this low, market is also as market has also taken out this high, market will take out this low as well. Remember, if market takes out the low first, it take out the high. Understand? So since market has taken out this high, the next opposite liquidity is then going to be what? The low. So you can look for confirmations and set to this low. You can take your profit here. You can still decide to sell below, or still take your profit above any level you want. But this CRT formation will actually tell you the right place to place your TP. Alright, so that is it. So let's assume the market has tapped into your key level on the weekly time frame like this. What do? First thing first, this is where most of you make mistakes. Alright, candle will be forming. You start looking for confirmations. Yes, it works most of the time, but not all the time. Whereby candle is still forming, then you move down to your daily time frame or 4 time frame. You see your structures there. You see your sweep and your break and your inducement. It's fine, but ask yourself, has that candle stopped forming? Has it finished forming? No. Then why are you taking trade? Alright, just follow the rules. Wait for it to close below first. That's number 1 rule. Let me write that out. Wait for it to what? Wait for it to close below. Alright, these are the rules to follow. Let me label it. Rules. Number 1, wait for it to close below or above. Alright, below or above. Then after that, what do? We have time frames that we follow. If for example we are using the weekly time frame, which time frame are you not going to move down to after market has started into your weekly key level? It's just simple. It's simply what? A time frame lower, which is what? The daily time frame. Following this time frame here, you get it. Alright, if you are using the monthly time frame, once market has started into your key level, you move down to weekly time frame to look for what? A break. Now, if you are using the weekly time frame, once market has tapped into your weekly key level, you move to what? A time frame lower, which is what? A daily time frame. Now, since market has tapped into our weekly key level, we're now moving down to what? A daily time frame to look for what? This. Let me show you guys. Let me clear this off. Alright, so we are going there to look for this. Let me mark it out again here. So let's assume that this one is the key level. Alright, so once market taps into that key level like this and reject and close below or above, what do you do next? What do? You move down to daily time frame. Let's say this is the weekly time frame now. You move down to daily time frame. Then your daily time frame, this is what you are looking out for. Sorry, I used the wrong tool. This is what you are looking out for your daily time frame. Something like this. A sweep and a break. Simple. A sweep and a break. Then after that, let me mark it out first. After that, you move down to your 4-hour time frame. Most of you enter trade from the daily time frame, which is fair enough if you're a swing trader. Alright, which is fair enough. But me, I mostly use the 4-hour time frame and below to enter my trades. Alright. Now, if you have seen this kind of formulation now on your daily time frame, what do you do next? You simply what? Wait for market again to tap into any key level on the daily time frame. Either the breakers block key level, the QM key level, or the apex. Alright, this is the apex. Now let market tap into it again. Right now we're not even looking for inducement or anything. We are still building bias. Our bias is not yet complete. So we're going to finish our bias on this daily time frame now. Remember, we started from the weekly time frame. So we are just trying to follow the trend so that whenever I want to take entry, we'll not go and take the wrong entry. Alright. So what do? Simply wait for market to tap into any of the zone. Now the reason why you not hit SL here is because I'm taking your trade here. So we are still confirming. So the market comes here, and break it, did you hit SL? No, because market has not closed below yet. Market did not close below, so you not hit SL here. All right, so if market invalidate this level, simply wait for this level to tap in. So market has tapped into that level and gives us a rejection and close below like this. Let me do this thing well. All right, gives us a rejection at this QM key level, then close below like this. Let me make this thing a bit bold. All right. Good. And close below like this. What do? This is now when you now move to 4-hour time frame to look for your models. We have different models, so I'll show you guys 2 of my models. All right, I'll show you guys 2 of my models. Most of you have your own models, personal models. So once market has come into your zone like this, that's now when you now move to your what, your lower time frame, which is 4-hour time frame or 2 hour or 1 hour 30 minutes, anyone you like, to look for your what, your models. Now you cannot take your trade confidently. All right, so what are you now doing now? You are selling. So even if the best forex trader in the world that post a buy setup, that's none of your business, because you already built your bias from the weekly time frame and you know where market is going to. That's why most of your dollars will hold trade for like 1 week. You'll be like, aha, they didn't know the market will still set to the highest extent. It's because they have beat their bias already from the higher time frame. You understand? So if you follow the same rules and steps, you actually achieve the same result that they are achieving. You understand? So that is it. So if you can follow the bias, honestly, you'll be in the good run. Even sometimes, even when news comes out, it might not even get invalidated. Your Zoom might not get invalidated because you are following the right trend. But sometimes, if the news is just so stupid, like high impact news, it can still invalidate your Zoom. But let me say 7 out of 10, the trade will not invalidate your Zoom to go your way if you are following the right trend, which simply means you are starting from the higher time frame, like monthly or weekly. Is when you are taking trade from the 15 minutes, 1 hour. That's the only time market can just break your zone. That simply means you never beat any bias. So market can be selling on your weekly time frame and you buying on your 15 minutes time frame, because you can see a buy structure on your 15 minutes time frame while market is selling at what, the weekly time frame. So if news comes out like that, your 15 minutes time frame can go against you, while the weekly time frame will still be intact and still be selling. So that's why it's good to beat the bias from higher time frame. Imagine you are selling from the higher time frame like weekly, then you now saw a 15 minutes formation to sell as well, which is in line with the weekly time frame. Honestly, the news might not even hit your SL because you are in line with the higher time frame trend. Sometimes news follow trend. That's the honest truth. All right, so that is it. So what do you now do? You move down to 4-hour time frame. Let me label this thing again. Remember, this is the weekly time frame. Weekly time frame, WTF. Then this is the daily time frame. Daily time frame. All right, now the next time frame to move to is what, your 4-hour time frame. What are you looking for there? I've told you before, your sweep, your break, and your inducements, or any of your models. All right, like I said, I'll show you 2 of my models. I have 5 models that I teach in Osborne Forex Academy. I'll show you 2. All right, so this is your sweep, your break, your inducement, then your break again, then mitigation to either your QM or your apex key level. Then you can sell from there. This is a very confident setup. Like, you'll be so confident in your trading. See, you can focus on just this model and you'll be good. If you know that, observe his trade very well. You focus on this model more, mostly. So you don't need to do much. Just follow one rules. Say follow one rule. Just follow some certain rules and you'll be fine. All right, you don't need to do much. So this is my first model. I call it SBI model A, and I have another one. Then we call that one SBI model B. All right, but I can't show you the rest. If you want a structural approach, like from basics to advanced, on Malaysian MSNR, Algo Market Structure, and CRT, which is my complete strategy, because I use Malaysian MSNR to frame bias. I use Algo Market Structure to enter my trade, because these models are under Algo Market Structures. Then I use CRT as confluence. So if you want to learn my strategy from start to end, then you can DM for private mentorship, which is one-on-one, or you can join our general mentorship group. That one is cheaper, but the private one is just one-on-one, me and you in the class. All right, so that is it. But if you cannot afford it, you can focus on what, the free videos that I'll be dropping here. All right, so that's it, guys. So this is my first model. Now let me show you the second model. This second model I call it SBI model B. The difference between this one and that one is just the type of liquidity that we have. Alright, so this is the second one. We have a sweep as well, but this one we don't have 2 breaks, we just only have 1 break before mitigation. Alright, look at it here. If you check very well, you see the market give us 2 breaks here. Let me show you. First break here, then second break here. Good. Now if you check this one, we have a sweep. We have a sweep here. Before I end this video, I will analyze good for you guys. Then we have an engineer liquidity, so that's the difference. We only have 1 break to the downside here. Look at it here. This other low that should give us, that would have given us the break, did not give us the break. So because of that, this place will now be termed engineer liquidity. Alright, so that is it. So these are SBI model B. So that's the difference. This one gave us 2 break of structures, while this one gave us only 1 break of structure. The second low did not take out the low. Alright, so this low is now what? Our target liquidity. You understand? Our target liquidity. So that's it, guys. So once you move down to your 4-hour time frame, these are some of the structures you should look out for. If you see this, then you cannot take your word. Trade confidently from this zone. Place your short position box here. Where is it? Place it here. Then place your SL above the validation key level. Then that is it. As simple as that. As simple as that. Same thing here. So that's it. I also have different models, the CRT model, other models, QM, and the rest. Like I said, I can't show you guys everything, but I'll try my best to be showing you guys one or two anytime I post a video. Alright, so this one I just showed you guys 2. Alright, so make sure you use it well. Now listen, trading is not a get rich quick scheme. See, you have to start from somewhere. Alright, and if Mr. A and Mr. B start trading today, Mr. B can start making profit fair before Mr. A starts seeing money. That's how it works. So don't say you are left behind, your mate are making it, you are still building an account. It's normal. Alright. See, even if you learn all the strategies on YouTube, or the best method in the world mentors you, you still pass through that losing phase. That is trading for you. You still pass through that losing phase. You can't run away from it. See, those are the things that will train you, discipline you, so that when you get to that profitability stage, you're not going to make the same mistake that you made before. But if you jump that losing phase, you jump that struggling phase and enter the profitability stage, it still affects you a bit. So that's why you need to pass through the training, pass through the hard part first before you get there. Alright, nobody will tell you that they not pass through that phase before they got profitable. Understand? So that is it. And if you know that your psychology is already ruined, that you cannot even analyze again, or let me say you are very, very busy with work or with anything that you don't want to analyze, you don't want to stress yourself looking at the chart. Good. What's the world have a signal group, so you can DM to join our VIP signal group. In that group, you can actually pass your prop firm easily. You can trade a live account profitably. As we have a very high win rate. So that's it, guys. If you have any question on this video, kindly drop it in the comment section. I will do my best to reply. Then if you have any personal question, you can send me a direct DM. And don't forget to join our Telegram channel, guys. Don't forget to join our Telegram channel. Very, very important. I drop free setups there. You understand? I drop free setup there almost every week. So let's analyze good together before we end this video. So this is good. From what I taught you guys, let's start from the weekly time frame now. All right. Let's start from the weekly time frame. So on the weekly time frame, oh my god, this chart is already rough. Let me use another chart. Guys. Alright. Let's do another chart. Oh, let's just clear it off instead. Yep. So we are on the weekly time frame now. What can we see? You can see that market is rejecting off this key level. Alright, you never tap it well. Look at the main key level here. Market did not tap it well. The one that is rejecting from right now is this particular one here. This invalidated key level. That's what the market is reacting from right now. If you move to line chart, you see it clearly. Look at it here. So that's what the market is rejecting from at the moment. So after that, what else can you see? You can see the market swept this low. All right, market swept this low. Then where the market target next? The high. So market has taken out the high already. So you can see, as simple as that. Now, what else can you see? You can see a V-shaped key level here that we can actually buy from. So this is the only potential area I'm looking at for buys right now, the weekly time frame. These are only potential areas. So we have an eye on this. Then if we see another key level above, then or on the lower time frame, we can see what take trade from there. But right now, this is the only level I have eyes on. So this market has not mitigated that level yet. Let's move down to daily time frame to see if we see anything clearer around that level. All right. So on the daily time frame, we can see that a key level here has not been mitigated yet. This is an invalidated key level, an invalidated A-shaped key level. Moving down to line charts, you see it clearly. Look at it here. Market even gave us a sweep here before breaking that level, and this is 10 breakers block in some cases. All right, breakers block. So move down back to candle chart. Then these lows you are seeing here can be used as our liquidity. All right, can be used as our liquidity. So what I'm expecting from gold now is what to come down to this level, sweep out this liquidity, then reject and close above on the daily time frame. Then after that, you know how we do it, right? You see wait for confirmation again on the daily time frame. After market has tapped into your key level again on your daily time frame, then you move down to your 4-hour. What are you looking for on your 4-hour time frame? Simple, a sweep and a break. Then wait for your liquidity or inducements. Now you can either buy from the breakers block, buy from the QM here, or buy from the apex. So that is what I am waiting for, and my target is going to be this high here, because this is like more of a CRT formation. Why? Market will sweep this low. Like I said, when market sweeps the low, the next opposing liquidity is going to be the high. But let's say market swept the high first, then where will be our next target point of liquidity? Is going to be the low. So since we're expecting market to sweep this low first, then our TP is going to be around this high here. So just imagine, even if you cannot even take the trade like this directly because of your arrow, you can still wait for more confirmation. Like I said here, look at it. So let's say you're able to take the trade from here, you can bag like 10 arrow plus or 5 arrows. All right, if you are more considerate. I don't know what you guys are using high arrow to do. People will be trading 30 arrow. I do trade it sometimes, but for fun, not consistently, because what I trade consistently is 1:4, 1:3, 1:5. You see 1:10, 1:20. Normally I have trades like that, but it's not what I do consistently. Just sometimes when I just see them, and sometimes for fun. You understand? All right. So if you take your trade from this confirmation area, you can bag like 10 arrow plus from here. I not say once market come here. Most of you used to like misunderstand someone. Listen, please. I not say once market come to this zone like this, you should go and place your SL here like this. So no, I said once market comes to this zone, wait for confirmation. All right, let market tap into the zone and reject and close above. After I close above, then you now look for confirmation your 4-hour time frame. Look for your models. You can use the two I showed you today. All right, that's now when you can use your SL at this level. Not just after market has tapped into it, if not, you just hit SL. Because one thing about market is market can come here and still decide to push. Where is it? And still decide to push down a little bit like this before rejecting and closing above. So that's why it's always good to wait for confirmation. Imagine those just entering here with small SL. For example, this. Sorry. Imagine those entering trade from here like they are buy from here, then putting their SL here. Market will just wick you out like this, then go your way. Look at what it did now. It will take you out, then go back inside, mitigate that level again, then hit your TP after they already wicked you out. But assuming you waited for confirmation, you would have even entered your trade from here. You see, so that's the difference between aggressive trader and conservative traders. So trade right, all right. Don't pursue profit up and down. Let market come to you. If you don't see good proper confirmation, don't enter the trade. So that's it, guys. Make sure you are following and you have subscribed if you are watching this on YouTube. If it's on TikTok or S, which is formerly known as Twitter, make sure you give us a follow. So this is Aussie Word. If you have any question, you can always send me a DM. So peace out, guys.